Everyone thinks Reliance is too big to grow.
Reliance Industries is the largest Indian company to have ever emerged in modern history. Reliance Industries, growing at a stunning pace each year. Today, Reliance Industries is huge. It has stakes in traditional markets, modern markets, and futures markets. It is a national leader in 4 segments: retail, digital services, media and entertainment, and oil, gas, and chemicals. These 4 segments serve as the largest contributors in the overall revenue, but the most exciting element that Reliance is on today is the hyper-growth engines of tomorrow, meaning digital technologies and platforms, new commerce, and the new energy ecosystem.
Reliance Industries, the rupees 19 trillion conglomerate, has the potential to give handsome returns over the next 1 year. Sounds crazy, right? But here's what most people are missing. Jio's profits are about to explode. Its retail business is quietly compounding, and the new renewable energy business could be the game changer that redefines India's future. Reliance is led by the legendary Mukesh Ambani, Asia's richest man.
Reliance became India's largest and most profitable company, both in the public and the private sectors.
So before you skip this video thinking Reliance is done growing, stay with me, because by the end, you'll understand why the next 12 months could be Reliance's comeback year. Everyone talks about Reliance's oil to chemicals business, but the real story, the one fund managers are quietly accumulating for, isn't oil. It's Jio and Reliance Retail. 2 consumer machines Ambani's building to own India's digital and physical wallet. Let's start with Jio. It's India's largest telecom company. While Airtel is renting technology, Jio owns it. Right now, Jio earns roughly rupees 210 per user each month, which is known as average revenue per user. But India still has one of the lowest data tariffs in the world. That's not sustainable. So telecom companies in India will go for tariff hikes soon. Now here's where it gets interesting. Jio has a massive base of entry-level users. Once prices rise, and these users shift to Jio Bharat 4G phones, ARPU jumps. Add 5G premium plans on top, and boom, we're talking about rupees 250 plus average revenue per user. For a company with 450 million users, that's thousands of crores of extra cash every year. And what does Jio do with that cash? They reinvest it to dominate the next battleground, the home internet revolution in India. Jio Air Fiber, which is a blazing fast Wi-Fi broadband service through 5G without cables, adds another leg to the growth story of Reliance Jio. India has less than 40 million wired broadband users, and Jio plans to target 200 million homes with Jio Air Fiber by FY26. Even if it captures just 10%, that's 20 million new customers. And each home broadband user pays around 700 rupees to 1,000 rupees per month. That's 4 times the revenue of a mobile user. Jio's next big play isn't in homes, it's in businesses. Remember Jio Platforms? The one where Google, Facebook, Intel, and Qualcomm invested billions? That's the real money machine. Because Jio Platforms is a digital ecosystem for startups and other businesses. It includes cloud services for startups, IoT for factories, Jio Games for Gen Z, Jio Meet for offices, and even AI-powered enterprise tools. Here's the exciting part. These aren't future projects anymore. They're ready to scale. And once monetization begins, which it's expected to in FY25, Jio will have recurring non-telco revenue streams. Now add all the 2025-26 triggers: tariff hike, 5G premium rollout, air fiber expansion, Jio Platforms. Put together, analysts expect 12 to 15% EBITDA growth in FY26. Now let's talk about Reliance Retail, which contributes larger revenue share to parent company Reliance Industries compared to Jio. While everyone is watching Jio and its 5G expansion, Reliance Retail is building something far more powerful: a distribution network that's becoming India's economic bloodstream. In the last year alone, it added over 1,000 new stores, crossed 30 crore registered customers, and now operates over 19,000 outlets across India. But here's the kicker. Only 60% of its potential distribution network are active today. Imagine the growth in revenues when Reliance activates the rest of the distribution channel. Through JioMart Partner, millions of Kirana shops now use Reliance's app for billing, orders, and logistics. Each transaction done by these Kirana shops earns Reliance money. Reliance already has 3 million merchants on board, targeting to double it by financial year 2026. Reliance Retail launched premium beauty store Tira. Tira is an omni-channel retail concept powered by technology and customized experiences. It offers a curated assortment of the best global and homegrown brands, making it the go-to destination for all beauty products in India. And that's not all. Reliance acquired financial stakes in aspirational fashion brands like Manish Malhotra, Abu Jani Sandeep Khosla, and Zivame. These beauty and fashion brands could easily unlock rupees 20,000 to rupees 30,000 crores in new annual revenues by financial year 2026. Everyone talks about Jio. Everyone talks about retail. But the real dark horse behind Reliance's next leg of growth might be its forgotten hero, the oil and gas division.
Wait, oil and gas, isn't that old school?
Some of the key drivers for growth in revenues of oil and gas division in Reliance Industries are as follows. Reliance's offshore gas fields, like the KG-D6 block in Bay of Bengal, is firing on all cylinders. Production from this block has almost tripled in the last 2 years, and by FY26, output is expected to hit 30 million standard cubic feet of gas per day, enough to meet 30% of India's gas demand. The government has introduced new gas pricing reforms which will ensure a minimum floor price to ensure domestic gas producers earn stable returns. This protects Reliance's earnings from KG-D6 from global price crashes. Now let's talk refining and petrochemicals, the heart of Reliance's legacy business. Reliance owns the world's largest refinery in Jamnagar, Gujarat. Reliance is converting this Jamnagar refinery into a high-value refinery plus asset where they're turning refinery off-gases into petrochemical feedstock and investing in biofuels, carbon capture, and hydrogen. This will add an additional rupees 12,000 crores of annual revenues in financial year 2026. Reliance Industries, India's largest conglomerate, is quietly transforming into India's biggest renewable energy powerhouse. And in the next 12 months, this green shift could start adding billions to its revenue. Reliance has announced a 75,000 crore investment to build the world's most integrated renewable energy ecosystem. The goal is to replace fossil fuel dependence with clean energy dominance. They're not just setting up solar farms. They're building everything from scratch, like solar module factories, electrolyzer plants for green hydrogen, battery gigafactories, and fuel cell systems for energy storage. It's called the New Energy Giga Complex in Jamnagar, Gujarat, a one-stop shop for India's clean energy future.
I am happy to inform you that we have started work on developing the Dhirubhai Ambani Green Energy Giga Complex on 5,000 acres in Jamnagar. It will be amongst the largest such integrated renewable energy manufacturing facilities in the world. Jamnagar was the cradle of our old energy business. Jamnagar will also be the cradle of our new energy business.
This renewable and new energy vertical of Reliance could contribute 25,000 to 30,000 crore to its annual revenues in the next 1 year, as per analyst estimates. Reliance has great depth in its management team with experienced professionals from diverse fields serving in its team of board of directors. Prominent names like Arundhati Bhattacharya, K.V. Kamath, Yasir Othman, Hagreev Kaitan are serving as independent directors in the company. Now coming to the shareholding pattern of the company, if you look at the last few quarters, Promoter shareholding has been quite stable at around 50%, with no pledged shares. This shows skin in the game of the promoter group. Also, FIIs and DIIs together own 39% shares in the company. Reliance Industries is a company suitable for investing by conservative long-term investors who want stable returns on their investment. As always, they should consult their financial advisor before investing.